Well, the broader market is yet again going down, but big tech is pushing higher. I'm going to comment today on the SQQQ inverse trade as well as Google and some other big tech companies, but the most important part of this video is going to be the commentary about where these markets might be heading in the coming days. Right now, we've got a number of factors that would cause us to be concerned about the market, but nobody cares. We've got the fact that we have slowing economic growth. That's undoubted. We have Fed rate uncertainty. Nobody knows exactly what he's going to do because nobody knows exactly what's going to happen with inflation. We've got a definite regional banking crisis. There's hundreds of banks that are basically insolvent on a regional level. And then we've got the looming debt ceiling crisis. All of these troubling and concerning market factors, macro factors, and yet the market keeps pushing higher. So I'm going to take a step back, and what we've got to do is we've got to remain fluid. We've got to look at what the charts are telling us. Right now, those are four big fundamental stories, but the charts and the technicals are doing their own thing. That's why I look at the technicals, and I'm going to share what I see in the SPX and the SPY with you guys today, and a couple other big tech companies that I think are definitely going higher. I'm going to break it all down for you. This is the Stocks with Josh show. As always, I want to thank each and every one of you guys for hitting that like. Say hi in the comments, and if you're new to the page, hit that subscribe. I'm giving daily stock and crypto analysis in an easy to understand format. So Bitcoin and the crypto heat map, it's red today, and I'd like you guys to check out the video I did yesterday. I provided a lot of great technicals for Bitcoin. I talked about Mara Coin and Riot, where they might go. But the main point I want to mention today is that what the market is showing us today in the charts is what I mentioned yesterday, that crypto is in an inflection point, sort of a crosshairs of some technicals, and it has to choose whether it's going to move up or move down. And when there isn't enough clarity, oftentimes that's where we see something move sideways, and that's exactly what we got today. We got a little bodied doji candle on the daily chart, which means that the market is trying to figure out what to do. Doji candles mean indecision. The market doesn't know whether it has the support to go higher or whether it's ready to break down. So until it figures that out, it's going to move sideways. If Bitcoin pulls back, I believe that buyers will be in at around 26,700. So if we get a pullback from here, if tomorrow it decides to break down a little bit, I believe the buyers will come in after 26,700. I don't think there's enough momentum to push it much lower or much higher just yet. All right, let's break down one of the bigger winners of the day, which is Google. They're up around 4% midday. Now, the last Google video that I did for you guys, when Google was around $117 to $118, I told you that we had a confirmation that we were now going to go up to 120 and 121. That's exactly what we got today. Google, it hit a low of $83 on November of 2022. That was a 45% decline from its all-time high of around $151. And here's what's important that I want you guys to understand about that. If you look at the big picture of Google, one of the things that I find interesting is that it actually broke to the downside earlier than a lot of other big techs. Most of big tech came down to its lows in December or the earliest part of January of this year, but Google had sort of been ahead of the game and it fell quicker, but it only went down 45% from all-time highs. It really hadn't gone up that much like a lot of other big tech. So I think it's come down sooner, but it's going back up later. And I really think that the charts are being clear with us. I want you to look at this beautiful crossover on the Gaussian channel. And I want to remind you guys of what a solid confirmation that is for Google right now. I'm going to go as far as to say that you missed the low. You are not going to get Google anywhere near $83. You have been advised. We're not going to get another chance at that. We've got too much of a technical confirmation of an upward move. My prediction for Google right now is that this is easily going to go up to $128. Now, nothing goes straight up, so there's going to be some tests of lows, but we're going to be making higher lows, and we're going to have some stops along the way. Probably going to stop at $123. That's a resistance. $125 is a resistance, but the charts are telling me that it wants to go to 128. And then I gave this in a recent Google video that if we get an extremely volatile environment with maybe some bad news surrounding the debt ceiling crisis, that we could then get a possible back test to 108, 104. That's going to be, in my view, the absolute lowest that you're going to be able to buy Google again in the coming days. So Google is doing extremely well, and big tech is still doing well. And we see Apple's up a little bit today. I'm going to cover that in just a moment, because as you guys have heard me say before, Apple absolutely takes the temperature of the market. It's a very interesting stock to watch because all the biggest investment firms have a large position in it, and you can tell whether or not the broader market is going to go up or down, I believe, on how Apple performs. But with all of these big tech stocks pushing up, where does that leave the inverse plays like SQQQ? Well, it's breaking down. Let's talk about that. Let's talk about strategy of risk management with SQQQ. There's two ways I have mentioned on this channel of how to mitigate your risk. You can either do it by having a hard stop loss, which means that if it doesn't go the direction you're expecting it to go, that you'll get kicked out of the position with a small and manageable loss. That's one way. The second way is position size. Now, this is the technique that you're going to use when you're not very certain of where the price action is going to go, and it could continue to vacillate in a tight range for a while, and you don't want to get repeatedly kicked out of it. This is also the place where you would consider accumulation. This is where you might be accumulating or dollar cost averaging. Now, some of you guys take accumulation too far, and you dollar cost average through a year of decline. That's not what I'm talking about. I'm talking about a very specific price range. So for me, I am taking my risk into control by having a small position size on SQQQ. And I'm only 40% into that position. I bought around the $28 mark, and obviously we're trending lower. And here's what I'm going to be doing moving forward. This is not a suggestion for you guys of what you should buy, sell, or hold. This is simply what I'm doing with my hedge against my big tech positions. I see great support for SQQQ right now at $26.84. Now, it's a good area of support that I think we're very likely to pull back and touch. But if we were to break $26.84, then we could actually go much lower from there, even as low as $21 or $22, and I'm prepared for that. So I bought around $28. I have not putting a stop loss on that. I'm going to buy more at $26.84. I'm not going to be in my full position, and I'm going to leave about a third or maybe 40% of my position for if we break beneath in that lower 20 range. Then I will pick up the rest of my position. This position size on SQQ is one of the smaller positions I've taken, and I'm going into it gradually. That's how I'm playing at this particular time. I think that all of this, though, in a moment of volatility, which we will have, the market's just not going to continue to climb from here. That's clear. The technicals are not telling us that we're going to take off from here. They're not. They're moving sideways. It's a time of indecision. But ultimately, when these markets do break down, I think that the SQQQ will shoot up to 34 or $35. That's my target. And this is where a lot of you guys might also get into trouble trading this particular play, is that you guys might be hoping, you're like, Josh, my average is up at $38 and my average is up at 40. We don't know if it'll do that. From a technical perspective, the only thing that we can count on right now from a technical perspective with all the data we have is $34, $35 range. Hopefully that helps you guys as you're doing your own research on this play and figure out what you're going to do with it. Let me know in the comments if you're in the SQs or what you're doing, if you're going to run with a stop loss or how you're trading it. I'd love to hear from you. Okay, I've talked about this trader that I want to bring up. He made some interesting comments on the market this week, and I want to share those with you. It's Mark Minervini. This guy is a winning champion day trader. Makes millions of dollars trading these markets. In my view, he's one of these guys that's cracked the code with Wall Street. He basically treats it like an ATM. He goes in the morning, makes his trades, makes his withdrawal, and steps out for the rest of the day. I love what this guy does, and I track him, and I listen to what he has to say, and I'm going to share with you guys something he shared recently. He, on his page, he's on Twitter. You guys can find him there. He did a comparison between 1991 and today. Now, I've been seeing a ton of comparisons. I've done some comparisons. I've seen the closest similarity in this market that I've seen tends to go back to 1969 and 1970. I'll talk about that in a future video, but I think that what he's saying here about 1991 and today is reasonable. I'm gonna show you the chart that he showed, and I'm gonna read you what he said, and I'm gonna give you a brief explanation of it. So he said, I don't think it's likely that things are gonna play out exactly like they did before, but conceptually, this bottom may resemble the 1990 bottom. where the market looks poised to break out, but instead we get some volatility or a final shakeout that weeds out the last of the bulls before a new uptrend really gets traction. I also wouldn't rule out a breakout from here where investors lock themselves out of the market due to worry over the debt ceiling. That's why it's important to let the market dictate your posture, bending and adjusting to the trend, never digging in with a rigid opinion. In 1990, few believed that rally was for real, and many were left waiting for a pullback that never occurred until the market had already moved significantly. So yes, what he's talking about, this is his version of you missed the bottom. He's stirring the pot and he's letting everybody that follows him know that, guys, we're not going to get back to those big tech lows. You're not going to get Tesla at $101. You're not going to get Apple at $125. You're not going to get Google at $83. It's not going to happen. These markets, if you're lucky, he's saying, with just the idea of the debt ceiling being your last hope, if you're lucky, we might get some volatility, which could provide you a potential good entry if you've been sitting on the sideline. But he's saying even that may not be a possibility. We could get to the debt ceiling crisis and these guys could simply raise the debt ceiling and the markets could just fly higher from there without any crash. We have no idea what to expect. That's why that video was so important when I said you guys may have missed the bottom. So I'm gonna take you guys into the SPX and into the SPY and a couple other stocks. I'm gonna try to do as quickly as I can. I know my videos have been a little bit longer lately, but before I do, if you need better trade tools, check out the offer from the moomoo investment app. You guys know I use moomoo every single day. They're giving away up to 20 free stocks for opening and funding an account. You can click on the link in the top pinned comment. This is a limited time and exclusive offer. But the best part of moomoo is the chat group that I host on the app. I know that not all of you guys can access it. At some point, I will get a Discord and I will bring everybody together. But at the moment, I do jump onto moomoo and the chat and I interact and I answer questions over there. That group is called Stock Josh Fam. So go ahead, if you're new to moomoo, get your free stock and then you can come find that group and you can have more conversation with me there. So as I was saying, my video, you missed the bottom, it wasn't a joke. It's a legitimate concern by a lot of big traders, Mark Minervini being one of them. So let's just quickly look at the SPY and I'm gonna tell you a scenario that might play out. Now again, I don't know. Nobody knows what's going to happen. There's too many variables. Inflation, debt ceiling, earnings I think are somewhat under control. You know, the Fed I think is somewhat under control, but there's some factors out there that can move this market. Nobody knows. But that's why we go to those charts, man, because the charts are telling a story every single day about what everyone in consensus, or at least the smart money, thinks. What the charts are telling me on the SPX, which measures the S&P 500, is that we're obviously range bound between 4,100 and 4,200. And I believe that we're going to see some volatility. We've come back to the bottom of the range. We could slowly drift up until the debt ceiling crisis back to the top of the range. That could go badly and we could get some extreme volatility. But the pullback spot that I gave you guys before, I think it's becoming a historic support point, and that's that 3,950, 4,000 level on the S&P 500. It's right there within the Gaussian channel. It's a critical support, and I think that we may drift up to 4,200 before that event. Big tech has room up. Like I told you guys, Google's going higher. I'm going to mention Amazon in a minute. They're going higher. And we might drift back up to 4,200. We might get a flash down with the debt ceiling crisis, but it might not go anywhere near as low as a lot of you guys are thinking it might. It might only come back to that 3,950. We'll look at it, and here's the great thing about technicals. If we break that 4,000, if we break that 3,950, then we have a bigger confirmation of a potential move down. But if it holds, and then volume begins to come back in, that's where you know that that's the lowest low it's gonna get. Now here's what I want to quickly jump into the SPY chart. I just want to show you guys this visual that all we have with the SPY from October going into this year, all we have is a series of higher lows. And then we're up against this range of resistance. And here's the main thing I want to point out to you guys. I pointed it out at the beginning of the year. I pointed it out when we were up against that 2022 descending resistance line. We kept coming up and touching it. And I said to you guys, the more times that a line is touched, the more likely that that line will break. And that's how I knew that the markets were going higher at that time. And sure enough, we broke above it and we've been moving higher ever since. Well, we're back in that same boat on the SPY. We are just up against pushing this higher range. And the longer that we push that higher range, the higher the potential that we're going to break up through it, right? Until we break beneath a lower range and then we begin to fall, we have to assume that we're going higher. And that's what I wanted to say about Apple stock. We're seeing something very similar. We're seeing it form a pretty nice area of potential support at this 170 range. So if we break higher from here, and the fact is it's not breaking down. And I mentioned to you guys before, you got guys like Warren Buffett coming out saying, yeah, we own a ton of Apple and we'd like to own more. These guys have only proven themselves to be untouchable in their elite status as the #1 company in the world with great leadership, with great they're timely, they're right on time with some of the decisions they're making about expanding their Apple Pay and their Apple savings accounts. They're just going to kill it moving forward, and we don't see any sell pressure. And that tells us that the top investment firms in the world and the top investors like Warren Buffett are not selling this market. Until we see Apple break down, we have to assume that we're still in an upward trend, and Apple, it's still above that critical level of around 168, 190. It's up in the 170s. So I will be keeping an eye on that, and so should you guys. It's one of my top indicators. Until it breaks down, these markets aren't going to break down. All right, let's touch on Amazon. I haven't been able to share my thoughts on Amazon because I've got to choose things to do videos on, and I haven't been able to bring it back up, but I'm bullish on Amazon, making money on Amazon. It's absolutely moving higher. It's in a very similar place as Google. Charts are very bullish to me. I think it's going to hit 120 bucks. Now, it's done something very interesting that I haven't shared with you from the last video. I pointed out then that there was this sell zone above $110. Every time it ran up above $110, it got pushed back down, and that was telling me that there was a lot of people that were stuck up high that were trying to get out. But here's what's happening, and here's what's changed that narrative on Amazon is that that zone is getting slowly eaten up, and we're moving up above $114, and that to me has made it a confirmation that this thing, and don't get shocked by it, could easily go back up to $132 in the days ahead. Now, when I've looked at the visible range volume profile, it kind of tells you where all the bag holders are. There's going to be a small battle, I think at around $119 to $120. But when you get above that, there's very few bag holders, and there's opportunity for this thing to just fly up. Now, this is the most important takeaway that I want you guys to have on Amazon, because this is the knowledge I'm trying to share with you guys. 110 was this area of absolute resistance, but as we've been pushing above it, as we go higher, that creates a very strong level of support. And so what I can interpret by that is that once whatever was a strong resistance in the past can turn around and flip and become an extremely strong support. And that's what I see happening right now at 110 on Amazon. Even if we get up to that 120 and even that crazy 132 price, at the end of the day, it's ultimately going to come back and it's going to find great support on that 110 in the days ahead. That's a long picture view, but there's a lot packed in there for you guys. Well, I think I'm going to cut things off there. I actually have more I'd love to share with you guys, but I just want to get this video out today. As always, I appreciate all the likes that I get. I appreciate all the comments I get. Just want to say peace and blessings to all of you. You know I love you guys. And if you're new to the page, hit that subscribe so you can continue to get this type of content and this market analysis. Guys, have a great day. We'll talk to you later.